This segment sponsored by Foster Financial. It's time for Money Monday, where we focus on providing women with current information to help make sound financial and retirement decisions. And joining me now is Caleb Doane, the Vice President of Foster Financial. Good morning, Caleb.
Good morning.
How's it going?
It's going well. How are you doing?
Doing good. Okay, so today we're going to talk about long-term care insurance. I mean, this is something that's quite interesting that impacts everyone, but why women in particular?
Yeah. So, I mean, women in particular, long-term care insurance, first off, is nursing home insurance. So it's insurance that will pay out a certain benefit if you were to need to go into a nursing facility. And it impacts women specifically because, one, women are more likely to go into a nursing facility at some point in their lives. And two, women typically spend longer in a nursing facility on average than men.
Oh,
Yeah.
like, is that because of life expectancy or women living longer?
Yeah, that's certainly one of the reasons. Another one, I think, is just because, at least in my experience, women seem to be a little bit more dynamic than men, and so they get put in a new environment, they're able to assimilate, make friends, change their routine. I feel like us guys are a little more, hey, this is my routine. If you're putting me in a new place, sometimes they're not able to adapt as well. So. And because of that, a lot of times women are spending a lot more on long-term care over the course of their lives. So, I mean, nursing facilities can be extremely expensive. I mean, upwards of $10,000 a month to be in a nursing facility. And so that's where the long-term care insurance comes into play. Traditional long-term care is where you just pay a certain premium every single month or every single year. It's kind of like car insurance. If you need it, if you go into a nursing facility, it's there. They have agreed to pay out a specific amount every single month for a specific period of time.
Okay.
But if you don't use it, then you don't get your premium back, right? You've paid it just like your car insurance. You're not getting anything back if you don't get in an accident. One of the big providers of long-term care insurance is a company called Genworth. They were really big. I mean, 15, 20 years ago, they wrote a lot of these policies. And that insurance company has sort of been downgraded a little bit in their overall ratings, which means their kind of financial footing has dropped a little bit. Basically, they somewhat miscalculated how many people were going to use these policies. And so a couple years ago, they sent out a letter, basically said, hey, we have to increase rates on people, so they increased premiums. And then just recently, within the last 3 or 4 months, they sent out another letter to people saying that, hey, we've requested to increase rates again. And so we've gotten, calls from different people asking, hey, I've got this letter in the mail from, a policy a previous advisor sold me or whatever it might be. And they're kind of asking questions, how would this affect them? The important thing to know is that a new rate increase has not been approved yet by the Indiana Department of Insurance.
Okay.
When insurance companies want to raise rates like that, on a policy like a long-term care policy, they have to get approval from the state of Indiana first off. And so the wording in the letter, it kind of seems like, hey, we're increasing rates, go ahead and lower your policy amount or whatever it might be. But it's important to know the state of Indiana has not approved a rate increase yet. It might still come in the future, but I wanted to kind of mention that for people.
Right, yeah, and this Genworth company is one of many who offer the long-term care insurance. So is this something that will take place across the board? Will all companies hop on the rate increase, or is it optional for them to pump it up?
Yeah, so they have to meet certain financial requirements for the Department of Insurance for Indiana to even approve a rate increase.
Okay.
You have to be on somewhat poor financial footing in order for the state of Indiana to say, yes, we're going to allow you to increase rates so that basically you don't go under. So if other insurance companies, another one out there is Mutual of Omaha, who kind of writes some of these policies, if they're on better financial footing, they're not necessarily able to just go raise rates for all of their policies. There has to be a reason for the Indiana Department of Insurance to actually approve a rate increase. And so a lot of times when a rate increase does get approved, it'll go out to everyone and say, hey, if you want to keep your same coverage that you have, you're actually going to have to increase your premium payments by 50%. You were paying $1,000 a year, now you need to pay $1,500 a year just to keep the same coverage.
Yeah.
And then they'll give other options of, okay, well, if you keep your premium the same, then your coverage is going to lower, all that kind of stuff. So if people get these, it's a big decision to make of, okay, how much coverage do I actually need? How much can I afford to pay? And so it could be a good time to kind of get advice from outside counsel to see what's going to make the most sense for you.
Right. And when people get this long-term care insurance, is it something that they can possibly get through their current insurance of other things? Let's say their life insurance. Is it the same type of insurance company that gives it, or are these unique, specific to long-term care?
Yeah, usually the insurance companies that do long-term care will also do other types of insurance. So like Mutual of Omaha, they do other types of insurance as well. But not every insurance company that offers regular whole life or term does long-term care. So it just kind of depends, which way you're going with that. But there's not a ton of insurance companies that are offering these traditional long-term care policies anymore, because there's just a lot of claims on them, more than what these insurance companies were anticipating. So they're not as profitable for the insurance companies, not as many are offering them.
That's crazy. Okay, so the biggest takeaway is if you get a letter, don't freak out yet, because there's processes and steps. And then number two, to consult with a financial advisor to make sure that what they're proposing makes sense for you and your well-being.
Yeah, that's exactly right.
All right, well, thank you so much, Caleb.
Thank you.
And as you guys know, Foster Financial is here to help women plan for retirement. So you can give them a call at the number below for a free consultation, and we'll be right back. This segment sponsored by Foster Financial.